We have Jack Crooks with us here today. Jack, welcome back to Traders Nation. How are you today?
Hey, Kurt, doing great. Thanks for having me back.
Good. On a serious note here, we've been reporting on it this week that the Arab states have launched secret moves with China, Russia, France to stop using U.S. currency for oil trading. Your thoughts?
I think the story is a bit silly, especially given where we are in the global economic cycle. Number one, they wouldn't risk a major change to the monetary system in the midst of the worst global recession in a long time.
Right.
I think it's just one of those stories you see, those false rationales when the dollar's in trouble, and there's no doubt it's in trouble. But one of the problems you get when you see a story like this, it's an implication that all of a sudden somebody's going to flip a switch, and no longer the dollar is going to be used. It really isn't that simple. It's a very, very hard thing to do, to move to a basket. And you have a lot of risk even when you move to a basket of currencies, even if the story were true.
All right, so basket would be one of those moves that these countries would go into, because, you know, a basket reminds me of like an ETF, which then that would almost kind of make sense, but I don't know. I think you're absolutely right. I don't think they could just flip a switch and get out of an old system. I think it has to, if they do it, they're serious about it, it has to be incremental. And also, Jack, here's another scenario. Let's say they would have to go to like a basket of currency, because if you make a conscious decision as a country today or as a world today to get out of the U.S. currency as a reserve, what are you going to go into? You've got to be able to if you go into another currency, man, you've got to be able to look way down the road. And what if you're on the wrong side of the currency trade, if you will? Make a bad decision, and that's not the currency you want to be in. The dollar gets strong again, and now what are these countries going to do?
That's exactly right. You could switch to something and end up taking more risk and more potential loss at a point in time. And one of the reasons the dollar is the reserve currency is we haven't been challenged even close in terms of the depth of the capital markets. And when you're talking oil, you're talking massive pools of capital having to hedge and do things in deep capital markets. So it's not as easy as it sounds.
All right, so what are these countries doing? The UN's getting involved too, and the UN, they're under their leadership today is getting more wackier and wackier, but that's another show and that's another topic completely. But what are they doing? Are they saber-rattling here, Jack?
You know, part of it is saber-rattling. Part of it is a real concern. There's no doubt the dollar's in trouble given the U.S. growth is really under pressure. Interest rates are low. And there's concern because, it's held in concentration 66 to 70% in central bank reserves, the U.S. dollar. So there's real concern. This idea, though, that, as I said, we're going to flip a switch and the dollar's going to be gone isn't going to happen, but there's going to be a natural transition as economic power shifts. That's what happens in world economies, and that process is starting to take place.
I don't know. Do you remember about a year ago when the dollar was getting crushed? It's been eaten by bears for quite some time. You remember about a year ago the story came out with a model? She says, I don't want to be paid in U.S. dollars anymore. Do you remember that?
I sure do.
This is that fight. Boy, was she ahead of the curve. Unbelievable. All right, so let's go on to the next. All right, so the dollar's weak. We know that. It's unattractive to some. All right, can we continue to keep printing more of it? Are we losing risk of dominance or maybe even prominence on the world market?
There's no doubt. The U.S. Government's trying to be the stimulator of last resort to keep everybody afloat out here and pumping out all that dollar liquidity. Not good for the dollar, as we all know, as we all see. We can't continue this. At some point, they're going to run out of our money. And I think we're getting really close because they're realizing the stimulus isn't stimulating right now. And you see the fact that there's just no private bank lending. All the money they've pumped out, it's not getting to the real economy. So they need to take another look at this.
Yeah, just real quickly, I'm not going to get into a montage. It was just that here in Arizona, $46 million we know went to actually social programs, had nothing to do with stimulating, nothing whatsoever. And that's where stimulus money's going. Maybe that's why nothing's being stimulated, because it's going to social programs and not to stimulate business, e-commerce, and spending. All right, so having said all that, world dominance and prominence can be lost. If somebody comes up, for instance, China's starting to say now that, hey, we're going to back our currency or try to with gold. Now, if you get countries like China that wants to emerge as a superpower, would that be one of the ways to do it? Is back in their currency with gold? We did it in the 70s. We've lost that, and we said, "Hey, we're not going to back it with gold anymore, but you can take our word. We promise not to ruin our dollar." So here we have China saying, "Hey, listen, we're going to back our currency with gold, and will countries like that, will they emerge as a superpower? Will they emerge as a prominent country and currency by doing that?
There's 2 points there. Number one, I doubt China would ever want to back it by gold because it forces discipline on the government. Look at what China just did.
Right.
They've spent about $2 trillion in the last 8 months to stimulate their economy. If their currency were backed by gold, there's absolutely no way they could do something like that to keep the music playing.
Right.
Number two, China definitely wants to have hegemony and be the global power.
Sure.
It would like to displace the dollar. But China's currency is not convertible. It's not convertible because they have draconian capital controls. They have draconian capital controls in order to suppress their people.
Right.
And until that changes, which is many years away, China's currency really isn't a viable contender.
So there's not a lot of options out there, is there? I mean,
there's not. I mean, euro could be, but the problem with the euro is they don't have a common bond market. They have all different bond issuance from different countries. There's no depth in the bond markets like the U.S.
Right.
If they were to do that, and it wouldn't behoove a country like Germany at all because it would actually raise their interest rates, so they're not going to go for it. The U.S. is still the only game in town in terms of capital market depth.
All right, so it boils down to a simple word of infrastructure. There's not really no infrastructure in place anywhere else in the world. It would take a tremendous amount of time, effort, and collusion to get the world out of the U.S. currency. Yeah,
and there's no doubt that transition will take place, I think, given the economic shift. Yeah. But it's a multi-year event.
Economic shift, U.S. a weaker country today than it was a year ago, 2 years ago, 5 years ago?
No doubt about that.
Getting weaker or stronger?
Getting weaker, unfortunately.
Yeah, I think you're right. I think you got something there. All right, so, boy, I don't know what to say about all this. You know, I really don't. Jack, let's look at the future. End of this year, into 2010, as far as the currency is concerned. Can this administration, one, is the administration going in the right direction? Two, if not, can they correct it, or they have the willingness to correct it?
Number one, they're not going in the right direction with the continued just stimulus, as you nailed it, printing all this money and still monetizing debt. They put themselves into a box, unfortunately. They've traveled down this stimulus path, and it's not working.
Right.
Can they correct it? Yes, they have to take some of this money out and let the dinosaur firms and all those that were holding up all that bad investment kind of take the hit and let the market work a little bit. But that's politically unpalatable, so it's still a question. So what we do here going forward, maybe we have some type of recovery, but the U.S. is going to grow way subpar relative to capacity because of what the government has done. Right now, it's the capacity. If you look at U.S. capacity to grow versus the growth rate, we're about 11% under capacity, and that's the worst since the post-war ever, and it's getting worse in terms of that output gap between what's possible and what reality is. That just shows that the private sector is just getting eaten away by the government sector, and we hope that changes, longer term.
Aren't these guys smart enough in D.C., or is this what they want? I mean, you can't help but wonder: are they that dumb to let it go, or are they that smart and they're absolutely on point of what they want to do?
Well, they have leftist policies, and it goes to social and government spending, and their economic leadership is Keynesian, or what's called neo-Keynesian. That means government just takes a front seat instead of letting the market take a front seat. And that basically is the problem, just a different ideology.
We got a book author coming on, and we're going to be talking about Keynesian in the coming weeks. All right, so here we have inflation. We're about out of time, too, quickly. It's in the government's best interest to have huge inflation or larger inflation because they can eliminate a lot of their debt that they plan on spending, right?
Absolutely right.
Yeah.
But the problem is they're losing the battle, and that's the scary part. We're seeing consumer prices decline in most all the major economies everywhere in a big way, and the governments and the central banks are about out of bullets. That's a scary situation.
Right, all right, and for as Americans, what's that equate to? You and me and consumers, are people just trying to get by and survive?
It equates to doing what we're doing right now. We're going to continue to save because we're worried about what our jobs out there, and we're worried about just the U.S. fiscal status.
Right.
And that in itself, is part of that lower capacity growth in the U.S. and keeps growth very, very low. It kind of looks like the Japanese lost decade situation shaping up, sadly.
Right, there you have it, Jack Crooks. Where can we find you?
At blackswantrading.com.
Thanks for being on the show today.
Thank you, Kurt, for having me. My pleasure.
You're more than welcome. Jack Crooks, folks.